Hi guys, welcome to today's video, which as you can see there, I am asking the rather controversial question: is there a bear case starting to take shape with the stock market at the moment? Now, before I get into this, as always, please pause the video and make sure you're comfortable with that. If there's any charts that you see here, absolutely do not act upon anything. This is for information purposes only, and as it will become clear, I'm very much a technical analyst. Now, the other thing to say is I do not do get-rich-quick schemes. My time horizon for any trades that I'm looking to take or any positions I'm looking to initiate are generally over weeks to months. I'm not really in it for the little $1 or $2 moves. I'm in the stock market for $20, $30, $100 moves. I like to take trend following trades with elements of swing trading, of course. But just to give myself a little bit of credibility, I am registered with the CMT Association. I'm working my way towards my chartered status at the moment, and technical analysis is what I'm widely known for. A lot of you have been emailing me, messaging, asking what's going on at the moment. A lot of you are stepping in the brown stuff, which I understand the frustration. So if you are one of those people, you can stick around for a minute at the end. Hopefully, I can maybe help you in some way. And if you do enjoy this, please feel free to subscribe to our reasonably new YouTube channel. Give it a like, give it a thumbs up. It all helps with the YouTube algorithms. Now, obviously, the market at the moment is incredibly challenging. Now, for those of you that are perhaps new to the market, or maybe those of you that are having a lot of challenges with your existing positions, what you have to understand is that the market is very much in a bit of a sideways rotation at the moment, in my opinion. And what I just want to draw your attention to are some of the key things, the key charts that you need to be aware of. Now, I was shot down on social media late last week, when I asked a very prominent technical analyst with hundreds of thousands of followers across various social media channels. I asked him, do you not just have the gut feeling that there's something bigger brewing? Now, the response I got was exactly what I expected. It was along the lines of, I don't use feelings as a data point, and I get it. Now, what I would like to just draw your attention to is the undercurrent of information. The easiest job in the world as a technical analyst is to go out there and tell the world we're still in a bull market, we are going higher. That is the default position for technical analysts across the world. Now, I think one thing that I think makes my work stand out more than most is that over the last couple of years, where we've had various corrections in the market, I have been able to use technical analysis to get defensive ahead of time. Now, the presentation that I'm about to deliver to you guys was actually delivered 1 week ago to my client base. So this is a bit late, obviously, to social media, but that's certainly just because the value that I need to provide my client base. But I think it's appropriate now for me to deliver this to social media so that you can see what I'm seeing. So first up, we've got the relative rotation graph here, and it's very, very straightforward here. Okay, so we've got utilities which are starting to move again. Now, utilities have been on a consistent uptrend for the last few months, and it's been lovely. There are various areas of strength, and I will walk through a couple of those charts. But the interesting thing to me here is we've also got real estate that's moving. We also have gold starting to move back into one of the leading areas. Now, again, I've seen prominent technical analysts this week saying that gold has had its run, and it could well have had its run. And there's a case to be made for it. I totally understand that. But what we are probably going to find is that if the market does start to decline, we are going to see these defensive areas of the market start to move again. Now, energy has been absolutely crushed. Energy is not a place that you want to be participating in. It has done absolutely nothing. So if you're out there and maybe you're in Chevron, Exxon, etc. There are far better areas of the market. Now, this is one area. This is technology. Now, I'm going to run over technology in a bit more detail in a second, but I actually find this rotation on tech to be a little bit misleading. And here's an example. So what we see now, this is obviously the broader market. This is the S&P 500 index. We've all seen the chart. Now, we're meeting resistance at a logical area of resistance. Now, I'm not going to get into the monthly timeframes because I think technical analysis can be made, can be presented in a way that can make the case for either a bullish environment or a bearish environment. You could cherry pick absolutely anything. But for me, the key thing is to observe the data, pick out what's relevant, and discard what isn't relevant. Now, the S&P 500, as I said, has been meeting resistance, but this tells a story, guys. Now, this is the S&P 500, the number of stocks that are currently trading above their 200 SMA. Now, we can clearly see that we've had a massive decline over the last few months, and this is an issue. That this tells us that the market is trying to move higher, but there's not a broad participation from a large component of that index. We also have to understand that we're dealing with divergence. So we have a very clear decline in momentum in the S&P 500. Now, that isn't great. Now, unless that corrects itself, then that is going to present a problem, and it is presenting a bit of a problem at the moment. We also have the S&P 500 equal weighted index. Now, again, this isn't something that we see when the market is looking to move higher. We've had 4 consecutive weeks of declines, and that at the very least should tell us that we need to be super defensive in the market. There is absolutely no point in allocating full risk in an environment like this that quite honestly could absolutely move in either direction. We've dealt with corrections over the last couple of years, and it would not surprise me in the slightest if we deal with another one in the not too distant future. Now, absolutely, there could be an announcement, there could be China news, absolutely anything could happen over the course of the next week. So what we have to just observe are what the key areas of support and resistance are with the market. And whatever price does, we just need to react to it. If the market starts to advance higher, nobody will be happier than I, because I love a trending bull market. Lots of money to be made, and it's great. But at the moment, we do not see any signs, at least in the short term, that this is a market that we want to be participating in, at least with equities. Now, I'm going to be showing you some stocks that are working at the moment. At the weekend, I provided my clients with a basket of 10 stocks that I felt that should be on the radar because they were areas that were still performing well. And I'll go over a few of those in a second. We've also got the Russell 2000. Again, looks like it's coming down and it wants to test this level down here. I think if we break below that, I think most of us understand that generally there's one index that gets a correction party started, and if the Russell 2000 breaks support, that's going to be a big issue. Again, we've got the mid cap index. We're chopping about. We're in a range at the moment, so it's logical that we come down and test the bottom end of this range. Now, the one thing that we all have to understand is that the more times a level is tested, the more likely that level is to eventually break. Now, whether this level breaks either to the downside or the upside is anybody's guess. Nobody knows. But what we have to do is just ask the wider question, what if we're wrong? Goes back to what I was saying at the start. The easiest thing in the world is to call a bull market. But I think if you have the understanding of when to get defensive, of when you should be allocating risk, etc., you can change your approach. you can attain better consistency in the market, and you're not just trading or investing on blind hope. So that's really what a lot of the technicals tell me. Now, we also have obviously tech. I touched on it with the rotation graph. And again, I think what we're seeing here with tech is a bit misleading, because what we're seeing is we're seeing the participation from the mega caps. We're seeing the likes of Apple, Microsoft, they're holding up okay. But what you need to also understand is that in a late stage bull market, we also have a scenario where there is a run for cover for all the major companies and the household names, and then we see a move away from the lesser known names. That's something that happens in a late stage bull market, and that's something that we should always be considering. Now, again, I'm not saying that we're moving into a bear market. I'm not saying that we're about to correct tomorrow. But what I think is very logical and prudent would be to have a plan of action in place for what levels you're going to observe and where you might want to cut positions, etc. Again, that's just me talking logically with my technical hat on. Now, we also have financials. Now, financials are obviously meeting resistance at the moment. We seem to be moving towards the lower end of this range here. That would seem logical, if it was to happen. We could absolutely rebound and, create new highs. Gold. Now, again, like I said, many prominent technical analysts are banging the drum and saying that gold has had its run. I'm not necessarily in that camp yet. I think what we're seeing at the moment is I think we're seeing a very logical battle, and it has been a battle, make no mistake about it, for the last 2 months. So something is going to give. We either resolve higher or we decline. So this level that we're battling between here, the $1,500 level, is extremely key. So I'm watching this level with a lot of interest, because that will have a wider impact, I think, with the gold ETFs, GDX, GDXJ, Kirkland Lake, Barrick Gold, the areas that you would generally want to look at in um, in an environment where gold is rising. Um, we had this breakout a few months ago. I was first to shout out on my social media channels and said that gold was an area that you wanted to be. That thesis proved correct, and now we're just waiting for a resolution to this battle. And if we resolve higher, I think we can absolutely be bullish on gold. Now, I touched on financials a second ago. Now, Goldman Sachs is finding a bit of support here. Now, I think the problem that we might have is actually with JP Morgan. Now, again, JP Morgan is having a bit of a question asked of it at the moment. We had a failed breakout, and now we are back below the breakout level. Now, what happens from here? If JP Morgan, which is essentially an index all on its own, it's not going to be great news for the overall market if JP Morgan is declining massively. Okay, that's something that you need to understand, because the market will generally not resolve higher unless we have participation from the big financials. Now, that's common sense. And I think if JP Morgan continues to show a lot of weakness and declines, that's going to be an issue for the overall market. We've got American Express. Again, we're having lots of question marks asked of American Express at the moment. And at the moment, I have to say, it's not convincing me of its strength at the moment. So if you are out there and you are holding American Express, you need to be watching this level very, very carefully, because at the moment it has an ominous look of a breakdown followed by a retest. So what essentially you're looking for here to be bullish on American Express, you want this to be a failed breakdown, because with a failed breakdown, we get fast aggressive moves in the opposite direction. So that's certainly a chart that I'm keeping a close eye on. Netflix, again, where do we go from here? Is this going to be a failed breakdown, or do we resolve higher here? These are all questions that you need to be asking, especially with your positions. I think Netflix is a stock that's in a bit of distress at the moment. I think most of us understand that. We've also got Alibaba. If with Alibaba at the moment, are we seeing a bear flag at the moment? There's a lot of news, I think, to come out of China this week, so that's going to impact massively on the direction of Alibaba, at least in the short term. Yes, great company, huge company. I love it as well. But, at the moment, is this chart appealing? Probably not. So I think this is the level to watch. I think if we move below this level, I think it's going to 130. So hopefully this bear flag thesis doesn't prove to be correct. But I think if you're out there, it makes a lot of sense to just have a contingency plan in place. Some of you guys will be long-term investors and you'll buy even more on the dip, dollar cost averaging down, which I think is the most illogical, idiotic concept that the stock market has ever seen. I think Warren Buffett's got a lot to answer for there. Um, but absolutely, that's a chart that you need to keep an eye on. Now, Apple obviously has held up well. Now, are we going to move to new highs with Apple? It's possible. I think we need to understand that the overall market direction is going to play a part here. But this is what I was talking about right at the start with the likes of Apple, with the likes of Microsoft. These are household names that are holding up well in this market that we currently have. As we can see, Microsoft has just been chopping sideways for months. It's done absolutely nothing. Now, for me, we are kind of in the defensive zone, the danger area, where I'm absolutely not bullish on Microsoft at the moment. I will only become bullish on Microsoft if we move above this level here. And that's absolutely something that I think you should consider. I've had many messages actually on Microsoft saying that, if it falls further, buy more. And yeah, I can see an argument for it. It's obviously a great company, but at the moment the stock is just not doing anything. And I think utilities is an area that you might want to consider. If we look at something like Southern Company, would you rather be invested in something like Alibaba or Netflix when we can clearly see that utilities have been performing very, very well, and this is an area that you might want to have exploited. We can see also going back to the start that real estate, the real estate sector has been doing very, very well. And just to cover off a few of the stocks that I presented to my clients at the weekend, this is one of them, Digital Realty Trust. Again, I get it. It's not a sexy name. It's not an Apple, it's not a Microsoft, but are you in this game for excitement, or are you in it for consistency and profits? And if you're in the game for consistency and profits, you need to understand where to look for the strength in the market and how to identify that. We've also got, KB Homes, KBH. Again, we're close to breaking out here. This is an area of the market that's performing very well, despite the declines with the S&P 500, the Russell, etc. This is an area that I think requires a bit of due diligence. And if you like the chart, if you like the stock, I'd suggest that this might be an area that you want to kind of look at. And we also have Vulcan Materials Company here. Again, this is another chart that's been presented to my clients. And as we can see, it's holding up very, very well. This is a stock that has recently broken out. We've met a bit of resistance there. We pulled back, and this has offered entry. And I think you can also probably set an alert there for maybe around $150, $152 for VMC. And that's really the gist of really what I wanted to talk about. As I said, technical analysis can be made to look however somebody wants it to look, but I think the key thing is to step back, look at it objectively, and despite, you know, individuals saying that, feelings shouldn't be a data point, I wholeheartedly disagree. I think if you are not somebody that's comfortable in the market, if there are enough warning signals in the market to say to you, do you know what, this isn't an area that I want to be participating in, or this isn't an environment that I want to be participating in, you're well within your rights to just remove your risk from the market and play the waiting game until the market presents you with opportunity, either to the upside or to the downside. That is the beauty of a trend following approach. You can make money when the market's going up, and you can make money when the market's going down. The problem that we have, and the kryptonite for most trading styles, is a sideways market, and that's kind of what we have at the moment. So I think the message that I want to get across is, absolutely you can be invested in the market. I'll never tell anybody to not be invested in the market. But I think it just seems very, very logical to me that if you do want to be invested in the market, you should be invested in the areas that are demonstrating strength, and you should not be in a situation where you're overly aggressive, getting caught out in nasty positions. Because quite honestly, I think most of you, judging by my emails, messages on all my social media platforms, there's many of you out there that are learning from losses, and I get it. It's horrible. But if you are somebody that's in that boat, you can probably stick around for just a couple of seconds here. And as I said, feel free to subscribe to our channel. We do try to upload once, maybe twice a week, if the time is available to do so. Well, hopefully you've got a lot of insight from this. But if this is the first time that you've maybe come across my work and who I am, like I said, I'm Sam, and I'm registered with the CMT Association, as I mentioned at the start. I also run honeystocks.com, super well-known, popular trading website. And I'm asked quite a lot, who can I help? Now, I think if I was to break it down to the individuals that I can generally work with and who I can help, if you are somebody that has a career or a business and you're trying to fit trading around that, I can probably help you in some way. If you're trying to move away from day trading, again, I can probably help you. If you want to learn this stuff for yourself and stop wasting any more time jumping around social media looking for holy grails and finding lots of free charts, if you're somebody that wants to learn this and trade with minimal stress, and maybe you just want to align with a successful trading group as well, I think I can probably help. And I think when you ask yourself, what if you had a trading plan, and what if you had a rule set? What if you had something like that to help you throughout the rest of your trading life? Now, the awesome thing about what I do at honeystocks.com is once you learn with us, we automatically integrate you to our community of successful traders. And unlike all the get rich quick schemes and all the nonsense and all the trade alert gurus, I log every single trade idea that I post to my community for complete and open transparency, and it's all logged on my website. Now, I have a code of ethics that I need to follow with the CMT Association. Everything that's displayed on my website is fact and indisputable. But if you are out there and you want to perhaps explore coming in and learning with us, I'm more than happy to let you check out my group for a couple of days, just so that you can make sure that everything's legitimate as well. But absolutely, everything there. I'm not saying that you can go on and you'll make 1400% in 12 months. You definitely won't. There's only a certain amount of capital that you can allocate at any one time, and to jump into every position is impossible. Um, but these are the supporting charts that I post to my group. So the reason I publish that is um, I think it's important to show everybody and let everybody know the types of charts that I post, because if you're somebody that's maybe coming in and you like to trade $5 stocks or $10 stocks, I'm not going to be able to help you. uh, the list of stocks that I have there um, should hopefully give you a broader insight to what it is that I do. I cannot help anybody that's looking to build small accounts. I think that's the other thing to say. I think if you're trading with minimal amounts, and I probably can't help you. I think you should generally have a decent capital amount behind you, because the worst thing I think from any trading perspective is learning from losses. I mean, the tuition that many of you will be paying to the stock market at the moment, where obviously it doesn't have to be that way, because many of you will be jumping around YouTube channels trying to learn, trying to find a holy grail. And a lot of you, unfortunately, and it's just the way it is, unfortunately, just a lot of you are going to get swallowed into the Wall Street black hole, and many of you are going to tell yourself that you can't do this and that you'll just give up. And that's a sad thing, because it doesn't have to be that way. We genuinely believe in making a difference at honeystocks.com. You can go and check out all our testimonials. We've got clients based all over the world, all over the US, Canada, Europe, Hong Kong, Australia. Just a beautiful group of individuals. And I think the one thing that sets the individuals that I work with apart from everybody else is everybody's just nice. Aside from being successful both in life and trading, everybody's just super nice and super welcoming and super helpful. So if you are and you would like to be part of a group like that, and obviously learn the approach that we have, just ask yourself if you want to keep doing it the old way, or if you're open to learning a new way. If you are open to learning a new way, just jump onto our website, honeystocks.com. Tell us what you struggle with. It's very, very simple. All you need to do is pick a time. If you want to talk to somebody about your trading, if you're sick of jumping around the internet and you would like to talk to somebody about, maybe just getting a little bit of help, I'm not going to try and, shove a program down your throat. I'm not going to try and force you to sign up to something that you don't want to sign up to. It all starts with a conversation with what we do at honeystocks.com. So if you are somebody out there that genuinely struggles and you would like a bit of help, feel free to reach out to us. But I make it as simple as possible. So if you would like to talk to us, just jump on and schedule with us. The calendar is open until the end of the week. But if you have stuck around to the end, thank you very much for watching, and maybe I'll speak to you soon. Thanks.